Russia's invasion of Ukraine initially tanked the value of its currency, the ruble, to the lowest level on record after the US announced sanctions.
We have purposely designed these sanctions to maximize the long-term impact on Russia.
But since then, we've seen a major reversal, and the currency has been one of the strongest in the world, rising to its strongest value against the dollar since 2018. I'm going to explain how Russia's currency has defied US and global sanctions to become one of the world's best performers this year, how the ruble's recovery is affecting Russia's economy, and why the ruble's strength is affecting inflation, growth, and the likelihood of a global recession.
Well, the ruble took a massive hit when Russia invaded Ukraine, but now the currency appears to be bouncing back.
Russia's ruble isn't getting stronger because market participants are bullish on the Russian economy. In fact, many currency traders and brokerages in the West aren't even trading it. Juan Perez, director of trading at Monex USA, tells me that his firm removed the ruble from their currency list months ago, but that hasn't kept the ruble's value from changing. After the US, Europe, and other countries announced sanctions on various Russian products and individuals, President Vladimir Putin responded by restricting how the ruble could be sold. Russia's central bank also raised the country's interest rate, and laws were passed that forced businesses to hold more rubles. Then Putin decreed that certain countries would only be able to pay for Russian oil in rubles. Prior to the EU announcing an embargo on Russian oil in late May, few nations had banned purchasing Russia's top export. So lots of money continued to flow into Russia, and much of it flowed in rubles. The ruble jumped from its low point of around 150 per US dollar after the invasion to almost 55 per dollar in late May. Joseph Trevisani, senior analyst at FX Street, points out that while the ruble's value has been artificially held up, you don't get a discount because it's manipulated. Russia has since removed some restrictions on selling rubles, and the central bank has cut its rates. That is reducing some of the pain for Russian citizens from the sanctions and cutting back on the expected economic impact of the war. Researchers at JP Morgan had expected Russia's economy to contract by 35% in the second quarter after sanctions were imposed in March. But the bank now predicts it will shrink by only about 1/4 of that. That recovery was boosted by increased oil sales to Europe and Asia, and a stronger currency keeping a lid on inflation. The improved economic situation provides some cover for Putin and the Russian government to continue the assault on Ukraine. The big picture for the rest of the world is, the longer Russia is at war with Ukraine, the longer we see shortages and delays for products like wheat and oil. That's pushing up inflation and adding to supply chain disruptions. This could mean more high prices for food, gas, utilities, and much more. It's a tough world out there, as hip-hop billionaire Jay-Z reminds us. He says, "My mind on my money, money on my mind. If you owe me $10, you ain't giving me $9. That's all for now. I'll see you next time.